Okay, do not do debt consolidation before watching this video. So I've ran into a lot of clients. Me as a funding broker, I've been brokering funding for a couple years now, and a lot of times clients say, "Hey, I'm in debt, and I'm just doing this debt consolidation." And what they don't know or what they don't tell you is that they're gonna ruin your credit for 2, 3 years, who knows how long. It can be for a while, right? They're settling and they're literally telling you, don't make payments, don't answer them, we'll negotiate on your behalf. But the thing is, they ruin your credit, and there's a lot better ways to be able to consolidate debt without ruining your credit. And that's what we're gonna find out today. We're gonna go over the top 5 ways that I recommend to consolidate debt. And go ahead and wait till the last one because that's my favorite. That's one that most people don't even think about on how to go about it. So the first one is one of my favorites, a personal loan, right? So let's just say you have a business and it's been going well, but you put money into personal cards. Now they got maxed out. Now your credit took a hit. Now you cannot go into business funding because you got to take care of that debt consolidation first. So if you were going to go the traditional route, they would tell you stop making a payment, don't answer them, and they're gonna you can go from 750 tanking down to 500. Crazy, like don't do that. So a personal loan, we can literally get you a personal loan for debt consolidation. It can be a big purchase, it can be a home renovation loan, it can be, you name it. There's many ways that we can get you funded, even vehicle loans, right? So once we get you funding, let's say you have $40,000 worth of credit cards, and that's where you're trying to consolidate. Yeah, it's high interest and it's compounding interest. All we're going to do is move it into a simple interest personal loan. So we would just get 30, 40, $50,000 loan. And with that loan, you wipe out all of the credit cards. And now your credit jumps up. And now you can move into business funding. Or if that's all you need to do, that's the best way to do it. Why? Because you add an installment loan into your account. So now it gets diversified, it gets stronger. You're paying low interest and it's simple versus compounding interest. Okay. So that's one of our best ways to consolidate debt that a lot of people don't think about. And we can even do 2 loans if you need a little bit more. Right. Now, the next one would be personal cards. You have to like think strategic because let's say if you only have $20,000 and you have over 680, preferably 700 plus credit score, and utilization is the only thing killing you, we could literally get you a high limit personal card. It can be 10, 15, $20,000 and move all those limits into the new one that hopefully you choose a 0%, credit card so that you don't pay interest for a whole year while you pay it down, right? So think about this. Instead of going into a lender that says don't make your payments, don't talk to them, I'm gonna get you a better deal, you're only gonna pay maybe 50, 60%, but they ruin your credit for a whole 2 years, 3 years, 4 years. It's just not worth it. It's not worth it. So we could very easily get your card, or if you already have new cards, we could distribute some of that utilization into cards that stay below 30% so that your credit jumps. Then we get you a high limit card that now we move everything into. Okay. So if you need help with that, comment the word funding so that we can help you get the funding that you need, because I tell a lot of people it's not what you do but how you do it that makes the biggest difference, right? So for us, we specialize in getting you high limit credit approvals. So it can be a single credit card of 10K, 15K, 20K, even 25K on the personal side. One of my best lenders is Navy Federal, which we have a whole breakdown on how to build a relationship to be able to get you those high limits that you need. Okay, that's my personal highest limit on Navy Federal, $25,000. So the next one would be business cards, right? Let's just say you used on the personal cards a lot of limit and you need to consolidate debt, and now you want business funding, but business funding is locked because you have high limit, high utilization credit cards on the personal side. Okay, so what we need to do is same thing, consolidate debt. How do you consolidate it? Well, personal loan, business cards, personal cards, now business cards, right? Let's say this is the next step. You already have everything set up. You would just need to bring the personal cards down to 30%, and we can do a 20, 30, 40, $50,000 business card. Now, out of the business card, pretty much you would just move the money to the business card, and there's many ways. I'll have to do another video to show how you can get strategic moving money around, essentially converting credit into cash, right? You convert credit into cash, and that's how you do it. Now, the next one would be number 4. It would be a HELOC, okay? If you already have a property that has equity, but you have low credit score, you don't have cash flow, well, the next thing is collateral, okay? There's 3 ways to get you funding, regardless of where you're at, regardless of your credit, regardless of anything. There's 3 ways, and I call them the 3 C's, okay? So either you need good credit, you need good cash flow, or you need collateral. The more C's you have, the more lending products that are available for you. So in this case, let's say you had very low credit. As long as you have a 600 credit score, but I do have some options that as long as you're a 500 credit score, which pretty much almost everyone should be able to, get approved. So if you have no credit or low credit, okay. If you have no cash flow or revenue, but you have collateral, that's the last C. We can get you a line of credit out of your own property, which is amazing because your money is already there. You already have that money, you just can't touch it. Now imagine you have $50,000 there sitting in your home, and now you're able to retrieve them. You pay all those credit cards, you pay everything, you consolidate it, and guess what? It's gonna be very low interest rate. That's what I love about HELOCs as well. So that's another strategy that you can do. Move it into a HELOC. That'll raise your credit. Now we got to look at your credit score. Like, what was it affecting it besides utilization? If nothing else is affecting it, now we can move into business funding so that you move everything into the funding side. Okay. So if you've made it to the last one, this is my favorite. I talk to a lot of clients, and a lot of times they don't think this way, but I've gotten a lot of deals funded for clients that have low credit, bad credit, 500, 600 credit score, no cash flow, no nothing, but they had a credit partner. Simple as that, just a credit partner. So I asked them, hey, are you doing business with anyone? Do you have any funding, business partner? Do you have a family member? And a lot of times they do, right? A lot of times people don't do anything by themselves. And so they're like, yeah, I have my partner, I have my girlfriend, I have my wife, I have my. And so this is a great way because, okay, yeah, we're getting you funding for you, but let's take a look at his or her credit. Once we take a look at it, we'll analyze it, and then we'll go off of our top 4 ways. Once again, can we do a personal loan? Can we do a high limit 0% personal card? Can we add them into your LLC to do high limit 0% business cards? Can they do a HELOC and lend you that money? Right? So this is when we start thinking outside of the box, and this is why we work with a lot of other lenders that are not specialized in personal loans or high limit 0% business and personal cards like we are, right? So what happens is they end up needing some funding, and we just look at the credit partner. We get them a loan, we get them a card, we get them a line of credit, and they obviously give them the funding that they need, and they take care of them, right? This is different than the average, and this is what makes us stand out more than the rest. So it's not what you do, but how you do it that makes the biggest difference in what you do. Okay, so comment down below which way helps you think the best, or which way you think it's the best. Because once again, I've talked to a lot of clients where they get their credits ruined for 2, 3, 4, 5 years, okay? From these companies that are doing debt consolidation, don't pay them, let it go to charge off collection, and guess what? Now you gotta go and pay credit repair on the back end, on top of not being able to use your credit for 2, 3 years. Like, it's just too much money, it's just too much time, it's just not worth it. If you just follow those 5 ways to get you funding and consolidate debt, that's going to save you a lot of time, a lot of headaches, a lot of money, you name it. And if you need help, comment the word funding so that we can help you get the funding that you need.